Click the bell icon to get latest videos from Ekeeda.
Hello friends, today we'll be discussing a situation where contract is almost completed and we have details of actual expenditure and estimated expenditure of future period. In that case, how to allocate notional profit, that we'll be discussing today. Let us start with the question. ABC Enterprises secured a contract for rupees 45 lakhs. This is the contract price 45 lakhs, and as per the contract agreement, the contractor would pay 90% of the work certified. That means your retention amount is 10% of work certified immediately upon the architect certificate and would be paid on completion of the contract. The work was commenced on 1st April 2006 and the actual expenditure up to 31st March 2007 are available. That means contract has been started on 1st April. Actual expenditure details are available up to 31st March 2007. That means we got full details of 12 months 2006-2007 and estimated expenditure up to 30th September 2007. Now estimated expenditure means future expenditure, expected expenditure for the next period. So that will be starting from 1st of April. So April, May, June, July, August, September. It is a period of 6 months. In this question, the word estimated expenditure is important. So it is hint for the student that we are required to prepare your estimated contract account or total contract account to find out the estimated amount of profit. Estimated expenditure up to 30th September 2007 are as follows. So we got the details of actual expenditure for 12 months. That is up to 31st March 2007, and we got additional information for the next 6 months, that is from 1st April up to 30th September 2007. So in all, if we calculate 12 plus 6, so total contract period is of 18 months. So we'll be preparing actual contract account based on actual expenditure for a period of 1 year, and we'll be preparing estimated contract account or total contract account for a period of entire 18 months so that we can come to know the amount of estimated profit. Let us mark the all other items. Direct materials, contract account debit. Indirect materials, contract account debit. Direct wages, contract account debit. Subcontract charges, contract account debit. Architect fees, contract account debit. Administration overheads, contract account debit. Hiring charges for equipments, contract account debit. Closing material at site, contract account credit. Certified work, this will be recorded to the credit of contract account. Now here they have used word cumulative. The word cumulative here stands for total, aggregate. They show that up to 31st March, the amount of work certified was 22,50,000. Whereas on 30th September, the value given is 45 lakhs. This 45 lakhs is an amount of contract price. That means this 45 lakhs includes amount 22,50,000. So therefore they have used the word cumulative, that is aggregate or total. Uncertified work, contract account credit. This is the information we have in table. Below now we'll read additional information or adjustments. A special machinery costing 4 lakhs was purchased for use on the contract. its estimated scrap value at the end of the contract would be 40,000. So here they have given us information about one of the machinery, special machinery which is bought for the contract. Now we are required to calculate amount of depreciation on this machinery. Special machinery cost is 4 lakhs and its expected scrap value is 40,000. Depreciation will be equal to cost minus scrap value divided by estimated life. Cost here is 4 lakhs. Scrap value is given 40,000 divided by estimated life, that is contract life 18 months. Four lakh minus 40,000, 3,60,000 divided by 18. So depreciation per month is 20,000. Now for period 2006-7, that is a period of 1 year. Amount of depreciation will be 20,000 multiplied by 12. So it will be 2,40,000. This is a proportionate depreciation charge for the actual period where we got the details of actual expenditure. Last part of the problem says it was decided that profit to be taken credit for the year ended 31st March 2007 should be that proportion of estimated net profit to be realized on completion of contract which the cash received for the year bears to contract price. Here we can understand that company is having its specific policy. Company is having specific policy to divide notional profit. Accordingly, they say that estimated net profit to be realized on completion of the contract should be divided as cash received bearing to the contract price. So our formula will be notional profit multiplied by cash received upon contract price. So here we are not required to calculate percentage of work certified in relation to contract price, because here the company has given its specific policy how to divide notional profit. So this is a new point in this question. Let us solve the question now. First we'll be completing contract account based on actual expenditure. Direct materials 10,50,000. Debit side direct materials 10,50,000. Indirect material 1,77,500. Direct wages 2,60,820. Subcontract charges 31,030. Architect fees 57,500. Administration overheads 2,14,390. Hiring charges of equipment 1,45,610. Closing material at site 1,29,000. Closing material at site will be recorded under the heading work in progress on credit side of contract account. Certified work 22 lakh 50,000, that is amount of work certified. Uncertified work 56,250. We have recorded all the details which are given in the table. Now we are going to record a depreciation for that period. Already we have calculated depreciation here. For a full year, amount is 2,40,000. This amount will be recorded here on debit side. 2,40,000. So we have recorded all expenses relating to the contract for a period of 1 year. Let us try to find out whether there is a profit or loss. Here we have closed contract account. We are getting here notional profit 2,58,400. This amount is carried down over here. Now we are not going to divide immediately this amount based on percentage of work certified and contract price. We'll have to prepare estimated contract account to decide how this value 2,58,400 will be divided between profit and loss account and reserve account. This is the unique type of thing we have in contract account, that as we have information of estimated period, we are required to prepare total contract account or estimated contract account for a full period of 18 months. In this case, now we are required to add expenditure of 12 months plus expenditure of next 6 months. Direct material with 10,50,000 actual, we have to add with this 9,25,000 expected. So total 19,75,000. In the same way, we have to add indirect materials actual plus expected, direct wages actual plus expected, subcontract charges actual plus expected. We have recorded all expenses actual plus estimated. On credit side, we are going to record a contract price, because as contract will be completed after 18 months, we are going to get full amount from the contractee. So it will be credited with 45 lakhs. Now we can find out the amount of estimated profit. After closing total contract account, we got estimated profit 4,68,500. After applying the formula, estimated profit 4,68,500 multiplied by cash received till date. Work certified actually is 22,50,000. We got 90% of that as cash received, which comes to 20,25,000. Divided by contract price 45 lakhs, we got the amount 2,10,825. This amount is going to be important for dividing notional profit for the actual completed period. So this is a contract account for a period of 12 months. We already got notional profit 2,58,400. Now here we are going to debit this amount 2,10,825, which we got by applying the formula estimated profit multiplied by cash received upon contract price. So this much amount will be transferred to profit and loss account and balance will be transferred to reserves. So amount transferred to be reserved to 47,575. So here the purpose of preparing estimated contract account is to find out estimated profit, which will be divided by using the formula which is given in the question, and that figure will be using to divide actual notional profit till date of completion of contract. This is what we have learned in this question. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.